Hey guys, thanks so much for dropping in. We are expecting a few more people to join us in the webinar, so I have the disclaimer up while we're waiting for them to come online. Make sure you have a read of it, and we'll get going as soon as we can. Let's get started. Once again, thank you so much for coming along to medicInvest presentation for capital raise. This is a really unique investment opportunity. I'm going to spend a bit of time explaining the concept, the companies involved, the main players, and at the end of the presentation I will outline the anticipated returns. Now, while I know some of you would like me to go there now, you really need to understand the context. When I'm finished explaining this, I'm sure you'll be as excited about this opportunity as I am. Fundamentally, we're looking to allocate the funds raised for two different sources. The first is to acquire some equity in a company called OnDoc, which is on track to yield some really exciting capital gains and fantastic dividends. The second portion of the funds will be used for marketing the OnDoc services and allow the group to access recurring commission payments. Some of that may not make a lot of sense, and I'll unpack it in the next 30 minutes, but the salient points you need to know are: the process we're employing will mitigate risk and increase potential yield. And the other thing that's super important is OnDoc is not looking for startup capital. This isn't one of those cap raises where we hope we can get enough money to get a company going and hopefully that company will start to. No, this company is fully funded already and it is actually trading already. What we're trying to do is buy equity in it before its official launch in April and it becomes unavailable for small investors. Well, not unavailable, but frankly unaffordable. Let's get into the details. The medical industry has created a perfect opportunity for OnDoc to succeed. Now, those of you who live in the States will probably be aware of everything I'm about to say. So the first is expensive insurance. Now, some are fortunate enough that their employer covers their insurance. Some have to pay it for themselves, and some have a mixture of both, and some, quite frankly, don't have insurance because it's just unaffordable. Regardless of who pays for it, insurance is expensive, and frequently the outcome for the person who has the insurance isn't amazing. Often there are long wait times to book an appointment. So you're feeling sick today, frequently it takes a few days before you can get in to see a doctor. Long wait times in the waiting rooms. So, you arrive at 11 a.m. because that's your appointment time, but you don't actually see the doctor until after midday. And unfortunately, in conjunction with that, the amount of time that you have to spend in your appointment is also really long. And then when you're leaving the doctors, then you have to pay the co-payment, and frequently that is quite a significant amount of money as well. Finally, inconvenient appointment times. It would be great if the human body only got sick during business hours, but we all know that's not the case. So if you do get ill at a time that's outside of business hours, then you've got a couple of opportunities. You've got a couple of options rather. The first one is you can ignore it. The second one is you can use emergency care or hospital treatment, but it's going to cost you a very significant amount of money. The final one is expensive pharmaceutical prescription medications. OnDoc will remedy all of these issues by providing a single low-cost subscription model of $30 per month for the entire family, so not individual, but for the entire family, that includes the following services regardless of whether they have health insurance or not. So telehealth. Now, some of you might already be aware of what telehealth is. I'm going to explain the OnDoc version of this. So using a smartphone, smart device, laptop or computer, or just a normal phone if the customer doesn't have any other device, members can access a US board certified physician 24 hours a day, 7 days a week. This service has current wait times of 10 minutes. So 10 minutes is probably significantly shorter than the drive time for you to go from your home to a doctor's consultation rooms. Now, during a consultation, the doctor can diagnose and treat 70% of the illnesses that are currently being treated by a traditional doctor and hospital service. In addition, the doctor will send the details of your treatment to a nominated primary care physician. So that means if you have been seeing the one doctor for years, that's fine. If you use OnDoc, they will send the consultation outcome and notes to that primary care physician so that he continues to have the full timeline of your health issues and resolutions. And that might include any pharmaceutical drugs that have been prescribed to you during your OnDoc visit. And if you do need to get medications prescribed by the doctor, they'll send that script to your local pharmacist. So you're seeing an OnDoc doctor, and he says you need this sort of medication, whether it's an antibiotic to resolve that strep throat, then I'm going to send that script to your local pharmacist that you have nominated, and that way it's just a quick drop around the corner, pick it up from there. And anyone in the family can access this treatment, and they can access it as much as they want. It's an all-you-can-eat concept for the one cost of $30. So you can imagine what that's going to do in the medical industry. The second thing is pharmacy. Now, if a doctor, including the example I just gave you of a non-doc physician, but if a doctor writes a member a script, they can use any one of the 65,000 pharmacies to access a discount on average of 45%. Now, this discount is obtained using an on-doc pharmacy card. Now, we'll unpack the benefit of this a little more further on in the presentation, but suffice to say, the benefit to members is huge. The third service is online specialists. So members can seek professional advice from a range of medical and paramedical specialists to get advice about any of their health concerns. And they can access these via email, including services but not limited to dietitian, psychologist, dentist, physiotherapist. So the whole idea of this service really is to stop people from Googling their symptoms and then jumping on a whole raft of websites and trying to work out, I wonder what my condition actually is. Instead of doing that, they can actually speak directly to the specialist. But it also means if they have some health challenges, or if they want to make some changes in their health, then, if they want, for example, they want to lose some weight, or they want to put some weight on, or they want to modify their weight in some way, then having a conversation via email with a dietitian could be extremely helpful to get them on the right road. All right, health advocacy. If members need hospital treatment, the health advocates will provide an independent advice on how they can obtain these services in an affordable manner. So if you've got insurance, they'll have a look at your insurance policy and say, you know what, sir, the best, or madam, the best way for you to get access to these services is to use these health providers because it's all covered in your insurance coverage. Or if you don't have insurance, then they will work out the most affordable way for you to get the treatment that you need from the service providers that are in your locality. So it's a fantastic way of making sure you get the best bang for buck, whether you have insurance or not. The second thing that they will do is if you already have medical bills, and lots of people in the United States are carrying very large bills, they'll negotiate on your behalf with the service provider to get the bills reduced. And there have been lots of cases where OnDoc members have saved literally thousands of dollars by using the service within a couple of weeks of joining. So it's an all-inclusive, no additional costing, no copay model, which will make OnDoc a disruptive service in the medical industry. And hopefully you can see that absolutely clearly. Everyone who I have talked to about this service, there's a sense of disbelief because it just seems so good, too good to be true. And B, they get super excited and can't wait to join the thing. It's one of those services that once you explain it, and they get a good understanding of how it's going to revolutionize the way they engage with health care professionals, it's one they get very excited about as well. All right, so how are OnDoc delivering this service? Well, they're being really clever about it. They are wholesaling the service from a company with a proven track record. Now, some of you might already be familiar with Teladoc. Now, Teladoc was listed via IPO in 2015, and it already has millions of customers. So we know it has the infrastructure to support a lot of OnDoc members, so the solution is very scalable. Now, if you research Teladoc, you'll also find that it has a member satisfaction rating of 95%, but their costs are quite different if they are working directly with customers, and they're more expensive than the $30 per family per month. All right, so let's talk about the costs. Hopefully you can recall we were discussing pharmacy and that each member can access a discount program that will on average reduce their spend by 45%. Now, the US is one of the most expensive places in the world to buy prescription drugs, with the average adult spending around $1,200 per year. Now, the tragedy here is often the US is the location where these drugs are formulated or have been developed, but that's another issue. Anyway, you can see on the table that is now in front of you, a family with 2 adults has a significant saving, particularly if you add in children. A single adult also has a significant saving. But one of the things you need to be aware of when you're looking at that table is that bottom line actually talks about the cost saving after they paid for the OnDoc services. So in other words, for the average US citizen, they are actually going to be cost positive. So by joining OnDoc, they'll actually save money and they will get access to the OnDoc service for free. Just a couple of things to keep in mind. One, the figure is an average. So obviously out of the 240 million US citizens, some of them don't expend that amount of money. But conversely, some expend significantly more, so their savings will be greater. And two, some people already access a discount process for their pharmaceutical scripts and drugs. And the good news here is that the OnDoc discount will still apply in most cases. Now, it might not be the entire 45%, but there still is a discount which will reduce or negate their membership fees. The OnDoc, for vast majority of US citizens who join the service, they will not be paying the full amount, or rather, they'll be paying the full amount, but they'll be saving a significant amount of their current expenditure by joining the service. All right, so let's talk about market opportunity. As I mentioned at the top of the presentation, the US is absolutely rife for change. At the moment, there is an extraordinary number of people, 44 million with no health insurance, and an additional 38 million people with limited health insurance. Now, while these people are obviously target markets for the OnDoc service, it's already experiencing great penetration in other markets, including soccer mums. Now, they may or may not have health insurance, but they are very time poor and could use the service to resolve time issues, but also to provide peace of mind, treatment for their family outside of normal consultation hours. So as I said before, sometimes, when the children get sick in the wee hours of the morning or very late at night, it gives these people an opportunity to access healthcare services immediately. Retirees. With a very fixed income, the rising cost of medical treatment is an absolute concern for these people. In addition, because OnDoc provides the service as a telehealth process, it means that they don't have to battle with traffic, they don't have to try and find a park, and you know what, they could potentially reduce their healthcare costs as well. Because unfortunately later in life, as you'd probably be aware, that we tend to consume more pharmaceutical drugs. So their saving per member is probably going to be significantly greater than most. So it's going to be a cost positive method, so they'll save money and reduce the amount of time and angst associated with medical treatment. Dual income families. Now these families may be able to afford health insurance, or in fact probably have health insurance provided to them by one of their employers, but they probably can't afford to keep taking time off work to get their family member treated. So OnDoc resolves this by allowing members to access health treatment when they need it, as opposed to, one of the children is sick. You often have tag team with the parents. Well, dad took the day off last time, so mum's taking the day off, and that's fine as long as you can actually get days off work. But then that becomes problematic if it's a chronic health concern which requires regular visits, or even it's cold season, flu season, and there are significant amounts of time lost at work. New mums. So the complexity of a new baby. Now, I'm not sure if investors have had a new baby member come into your family, but you'd be aware that whilst they're a bundle of joy, they bring some complexities as well. And that is, A, you often don't know if they're sick or whether they're just crying for some other random reason. And B, getting the baby and potentially siblings in the car can be a very traumatic experience. So resolving both of those by having medical treatment available when you need it, and by making certain that you don't have to jump in the car, that you can access health treatment whenever you need it, is also a fantastic way of resolving it. There are a lot of target demographics for families, but there's even more exciting groups like churches, community groups, and charity groups. And I'll spend more time later in the presentation, but to suffice to say that this particular service can turn donations on their heads with these influential groups. All right, the size of the telehealth industry. It's predicted to be about $21 billion by the year 2022. Now, this statistic comes from healthfairs.org. Now, these guys are known for conservative assessments, so we think it could be higher than that, but the point is, even if this is accurate, it represents a very significant growth in this area, and we've talked about the reasons why. Significant players in the medical industry see it as a way of reducing costs, as a way of reducing the requirement for one-to-one treatment processes, of maximizing staff yields, and all that's terrific, but what it means is the telehealth industry is going to go through a massive boom as health industries try to reduce their expenditures while increasing their profits. Let's go back to OnDoc and its marketing approach. Now, OnDoc is providing a costing model most people are familiar with thanks to Netflix and the other streaming services, and it's a subscription process and it's all-you-can-eat model. Now, I don't think this slide has too many surprises, but you should be aware that there is already significant interest in OnDoc prior to launch. Now, their website is already attracting sustained traffic. Now, this traffic is currently not being actioned, but after launch they'll use live chat, retargeting and other approaches to yield the best possible results. They also intend to launch a social media campaign, and I have some of the content they've started to create for these campaigns. There has also been some interest from media companies. Now, given OnDoc represents a significant change in the way healthcare is going to be delivered, and it is such a potentially disruptive company, there's a great deal of discussion about a documentary and some media bites where the media gets an opportunity to expound on the benefits of these types of organizations and how it's going to influence and change the way the US citizens interact with healthcare professionals. But you should also be aware that OnDoc is not just focusing on traditional advertising processes. Those in the States would already be aware that the medical industry, it's pretty noisy, and they spend a lot in traditional advertising. So OnDoc is going to go a different route by way of doing a referral commission approach. Now, the benefits to the members is really immediate and a very simple and effective commission model. 3 for free is one of the things that they're talking about at the moment in the OnDoc world, and when members refer 3 friends to OnDoc, they get the service for free. So it's a pretty compelling offer. Tell 3 members of your family or your friends about the service, and when they join OnDoc, your service becomes free. Beyond these 3 referrals, members will be paid $5 per member per month. If you introduce 10 people, you'll start getting a recurring income of $50 per month. And this is a scalable approach. And while I'm not going to go into the whole commission model, as it's not appropriate for this discussion, I will say it's fired up the affiliate marketing segment, and the results before launch are pretty amazing. For example, the company had a target for users before the end of 2019, and they've hit the 50% mark before launch. Now, I see that there are a few questions floating around, but as mentioned, we'll soldier on and we'll take questions at the end. As mentioned, the launch is scheduled for April. Now, part of the launch will be the release of a mobile phone application. This will be the way to simplify members accessing services, which is terrific, but it will also simplify referrals, which is probably more important for our conversation. So with a few clicks, customers will be able to tell all of their contacts on their phones about the service, and given they'll be incentivized to do so with the 3 for free and $5 per month for commission, there is a strong belief this will increase member numbers significantly. Charities, community groups and churches. Now, this is a pretty exciting area. I think we've all probably been exposed to traditional fundraising approaches from these groups, from cake sales, dinners, auctions, book sales, and the list goes on. Now, these are really high energy events that yield a one-off pop of income. So in other words, a lot of effort marketing for the event, a lot of effort during the event, and then it's done. And you get one income increase. So OnDoc is actually targeting these groups to change their model. Instead of a one-off event, what they're suggesting is that these groups encourage members to join initially, and then the wider community to engage in the services. And in each case, OnDoc will then pay a recurring commission of $10 per month. So obviously, this benefits community groups and churches and so on, because it means that A, it's not a one-off high-energy event. In fact, it could be a one-off or a recurring event, but it pays recurring income that they can rely on. Income, quite frankly, will grow. So, given the fact that each member who signs up from this may, in fact, then invite friends and family who are outside of these community groups to join, there's a good chance that this income will continue to grow as the word spreads. And these people are, obviously motivated to do so, because not only are they going to generate income for themselves, they're going to generate additional income for their community group or church. So initial conversations with these types of groups have been really positive. All right, so who else is in the marketplace? Well, the good news is there are others out there indicating that there is a market for this sort of product. The better news is no one is doing it like OnDoc at the moment. The other main service providers are more expensive, and frankly, they're getting pretty mixed reviews. You can see that MD Live is almost 4 times the cost for a family, as are Doctor On Demand and Health Tap. And none of these include the other services offered by OnDoc, the pharmacy discount, the health advocacy, and the online specialist. Now, they do offer other services, but they're quite expensive and they don't represent the same value proposition. So people engaging in these type of services will probably not be the target demographic for OnDoc anyway. So frankly, this is a fairly unplowed field. The next slide shows the timelines for the company. And you can see that it was established in February 2018. Given it has been recently independently valued at 22 million, it indicates there's some success thus far and potential yields for future years are high. You'll also note that by February 2019, its goal was 500 members. Well, the member level is actually 10 times to that. Now, I'm not predicting they'll continue to 10 times targets, but it's a pretty positive sign right from the onset. Okay, let's go into the key players. So you can see the CEO and founder is Mr. Robert Wilson. Now, Robert has extensive executive experience coming from Stream Energy, where he established and grew the affiliate marketing program there. In this program, Robert managed tens of thousands of affiliates and helped Stream become a very successful enterprise. The CSO is Leslie, a very highly credentialed person who is making sure the business continues to stay aligned to its goals of delivering quality health outcomes and engaging with its audience. She is also responsible for delivering on customer experience effort to ensure OnDockers are getting a high quality outcome from the moment they join. Now, I am the third person on the slide. You can see I've been running a digital agency for more than 20 years, servicing government agencies, tier 1 companies, and hundreds of SMEs. I suppose the important thing to remember here, investors, is I am influencing the marketing campaign of the entire business. So I'll be able to leverage all assets for this investment group. This gives medicInvest participants inside running on the content development, as well as being aware of any business changes or industry changes before anyone else. Given Webmate will also be managing the marketing process for a group, there's a few things I want you to be aware of. So the first is, as indicated on the slides, we'll be using a range of digital technologies to deliver outcomes. But this will be done in concert with digital agencies from the US. For example, I'm in discussion with a number of firms who work with micro-influencers. And together we'll be developing strategies that will deliver short and long-term outcomes. And the important thing for there is I'm not making the assumption that I am the only person who, or my company rather, is not the only one that can design these strategies. I'm working with a group of people to come up with the very best strategies who also have local knowledge and an intimate understanding of the US culture. The second thing to keep in mind is we are not working just on a digital platform. We'll use pop-up mall stores to speak directly with the public. Now, while these will definitely help us continue to convert customers, it will also allow us to build an awareness of consumer value propositions. Any objections that people have to the service, any resistances, so that way we can use that information to enrich our online content as well. With the $250,000 in marketing, the plan is to expend about $10,000 on building out the necessary assets within the first month, as well as starting the monthly expenditure of $40,000 a month on advertising. This will include things like starting SEO, which will run the full length of the investment program, as well as short-term efforts using influencers and building out advertising funnels. Testing a whole range of different strategies, working out which strategies are the most effective, and funneling more money in that direction, and obviously killing off any strategies which we show and demonstrate using good statistical analysis that they are not giving us a good ROI. We estimate initial acquisition costs will be around $60 per user. Now, this is a super conservative figure based on other campaigns we've run for other businesses. But frankly, I wanted to ensure that I lowball this number initially. Now, by the time the program is complete, which is by the end of year 2021, we expect that figure to get down to about $30 per user. By this point, we'll have worked out what channels and approaches are working, and we will focus on those. And the concept here is to ensure the commission return of $5 per user. So each person that we sign up will generate a $5 commission per user per month. So our goal is for that value for all the users to exceed our spend before the capital is expended. So in other words, if we're spending $40,000 a month, we want the commission return to be greater than $40,000. So instead of the capital continuing to decrease until it hits zero, it will decrease until we hit that break-even point, at which point it will start to expand in value. And when it does, we will then start to consider expanding our monthly advertising spend so that we can aggressively start targeting additional audiences, I suppose. But this point is super important, so I'm going to emphasize it. In the model shown, we get down to $30 actually in 6 months, which means making certain that we understand what channels are working, and turn off the ones that don't, which is effectively how we'll make that significant saving. But, and I really want to emphasize this point, if this isn't achievable and we do something that has never happened before in the 20 years I've been in this business, and we're forced to keep acquisition costs at around $60 per user, it will still be successful. The model is intentionally conservative, and so are the figures currently displayed. But if we can't achieve them, then we still succeed. Now, the only reason, if you're looking at that graph, you can see the line continues to accelerate. The only reason the value continues to climb is as we build the balance, we will continue to increase our spend and widen our target audience, expose the message to even larger audiences. And that will only happen once we have a healthy marketing capital balance. In fact, to ensure the outcome exceeds the figures displayed here, I've completely ignored referrals. So if you remember back when I said that if a member refers on a family or friend member to get the 3 for free benefit, this will actually increase our member count by 3 from that one person. But I've ignored it because we don't know how many people that this is going to encourage to refer the service on. So to ensure that the numbers that I display here are very conservative, I've avoided them. But you can imagine that even if we just get a factor of 1.5 in there, so on average, every second person refers one person, then it's going to make a significant change to the numbers here. And I'm hoping that at the end of each quarter, when I report back to this investment group, that has started to significantly reduce our acquisition costs. But like I said, I've avoided that assumption and I'm keeping the numbers very, very conservative. So we expect to gain about 80,000 members. Now this might seem like a big number, but keep in mind the audience size. Now if we just focus on those people who don't have enough insurance, ignoring all the other demographics that I've already talked about, who are already showing a high level of interest in this product, but if we just focus on that one demographic so that I can show you how small a part of the pool we're after, the numbers that are displayed on the slide here represents 0.2% of this group. So we don't need a big proportion of any demographic here to be very successful. We're not trying to propose that we're going to dominate the market in healthcare in the US. What we're saying is we just want to become, an average or even actually a small player. And that small size will be significant enough because the audience is so large for us to be super successful. The monthly commission rate is based on the number of members. So hopefully that's easy for you to work out. And the balance of the marketing budget will be the result of all the commission payments for the growing group of customers over the 2.5 years. So month 1, we won't get too much because we won't have too many members. But by the last couple of months, we're going to be getting a very significant commission payment because we have a lot of members in the pool by this stage. Add up all that money and then subtract the marketing expenses that we have expended over the entire 2.5 years as well. Now, it's my hope, I'll come back to the group propose more aggression in the marketing programs, as I mentioned before, but that will only happen if we have a very healthy balance and we can feel justified in expending some more. But what it should tell you is a couple of other things. Is A, I'm going to report back to you on a regular basis, and B, I'm not going to be making the decisions by myself. We will make a collective decision on what's good for the group. All right, so let's get back into the final numbers. By 2021, we're estimating OnDoc will be valued around $70 million. Now, given the company went from 10 million to 22 million in 6 months, we think this is a low number. If it continues to double, the value for the company will be significantly greater. But like I said, and I'm continuing to say this, I'm pitching my numbers low. It's my hope that under promise, over deliver. Now, dividends will be paid to any party acquiring equity about 24 months later. So the dividend is based on about 30% of net profit. So the estimate is the business will yield about a net profit of about $2.7 million for the 2021 year. And again, this is a really low figure. But importance here is that will be the first year that we as a group qualify for it. Because if this cap is completed by middle of May, which is our cutoff date, then middle of 2021 is the first time that we actually qualify for a dividend. And that's why that value is up there. The 1 month commission is payable if people choose to cash out at this point. Okay, so in summary, and again, this is a really conservative value, but we're estimating by the end of 2021 that your return on investment for your $5,000 investment will be about $68,000. Again, these figures are all in US currency. So look, I'm thinking that by the end of 2021, when we have the runs on the board, and we continue to grow the commission value by continuing to expand our marketing spend, investors will probably want to stay in the group. But if you want to cash out, that's fine. That's your opportunity. But for those of you who understand compounding value, you'll probably realize what I'm talking about there. The numbers beyond 2021 are super, super exciting. But I want to allow everyone an opportunity to exit the program at this point if that's what they feel they want to do. So there's a few final things that I really want you to be aware of. The first is, if you want to see the financials for OnDoc, we can do that, but you need to sign an NDA. And I believe that's a very fair and reasonable requirement. And the same actually goes for traffic volume. So I can show you the latest traffic volumes for the OnDoc website. And again, that is protected by a non-disclosure agreement. So as mentioned at the start, we're acquiring equity as well as marketing for customers to reduce exposure. So that will mean that, if we have massive success or not success in the marketing, that's fine because we've got equity, and the vice versa. So if the company doesn't grow in value as rapidly as we would hope, that's fine. We've got the marketing process, and that will be kicking some goals. There are only 100 shares available. So quite literally, if 10 people decide to buy 10 shares, we're done. There'll be no further opportunities to other investors. So this literally is, and I hate to use the term, but it's a very limited offer. So if you're thinking about it, great, but don't sit on it for too long. Now, the current share offer from OnDoc for equity acquisition is only available until the middle of May. So this cap raise must end then anyway. If you're thinking, jump sooner rather than later. The other thing to keep in mind, OnDoc is not currently selling equity to any other parties. And in fact, the only reason I think that they are continuing to offer this to us is I was able to negotiate with the business owner, and because I have offered my services as a marketing consultant to them, they have very generously extended this offer out so that we as investors can enjoy that opportunity. So if you are a US citizen, yes, you are very welcome to jump in and try the OnDoc service, so that way you can do your due diligence from the inside and get a feeling for the sort of service that is currently being provided. I will give you the one caveat though, that they are in pre-launch, so a lot of the polish isn't there yet. The service works and there's lots and lots of people in there who are enjoying the service. It's fine, but it's a little bit clunky to get everything working. That will change when the mobile phone application is released. The second thing is that you should be aware of is the owner actually runs a weekly webinar, and in that webinar he talks about the services, but he also talks about the business opportunity. So he is actively getting out there and telling members how they can generate additional recurrent income, which is fantastic for us as investors, because each and every member that we have sign up will be attending these webinars, and it will give them an opportunity to reflect on whether they want to build a recurrent income stream. And if they do, that's a massive win for us as well. So that's the second thing to keep in mind. If you've got any more questions, then we'll be super keen to answer them for you. But in summary, this is a fantastic investment opportunity. It's a $5,000 share for a 1% offering in the medicInvest entity. medicInvest is a company that has just simply been structured for the purpose of this capital raise. So we have a clean set of balance sheets. We'll be reporting regularly back to investors once the cap raise is complete and we've started to invest and started to do our marketing processes. So we will regularly report back to investors on returns and anticipated outcomes and strategies that we're currently implementing. I'm looking forward to working with you all. Thank you very much for your time. Can't wait to see you on the inside.